Fears rising about the health of the digital ad market. YouTube reporting a big miss on ads yesterday. Snap issuing a warning for the quarter around advertising, and similar concerns now at Twitter with the potential sale of the platform to Elon Musk. Apple and Amazon set to report tomorrow. How concerned should digital platforms be about this marketing spend slowdown? Let's welcome SRB Bloom, managing partner at SRB Ventures. Sal, great to have you here on set with us. Are we only seeing a slowdown at the smaller players, and for others there is no alternative, so marketers spend there?
I think there's going to be a lot of challenges across the board, and I think you're going to see it more as we head into Q2, because what happens is this is all a trickle effect, right? You have this entire market that is going to start experiencing a lot of uncertainty that we're seeing out in the market. Inflation, for the large privates that raised at these huge valuations over the course of the last year, they're facing a tougher fundraising environment, and those people were spending a lot on these ad platforms. You're not going to see that as much from them. They're going to be tightening their belts, trying to think about cash flows, trying to think about preserving some of that cash, and that's going to impact these large digital ad platforms.
To the extent that there is that competition that won't be as well situated, could that be just the strong survive and the rest don't? I
think so. I mean, you're going to see people flock to quality when it comes to this stuff. And so when you think about Twitter and an ad stack that has been challenged historically, especially on the direct response advertising side, it's going to be tough for them to do well in an environment where people are pulling back.
But so isn't it, I mean, the tailwind in the secular digital ad world is such a massive market, and it's only growing. It's not going anywhere. Linear TV is dead. So isn't this really a story of a relative outperformance from company to company? And so, Facebook is what we hear, you tell me, is getting its lunch cleaned by TikTok and even Reddit. And so, talk about that.
Yeah, absolutely. Look, I mean, it's all time horizons. Long term, absolutely. Digital advertising is going to continue to rise. People are going to continue to spend money here as this grows. But in the short term, it's really going to be disrupted. And I see a lot of disruption coming in Q2. Any of my friends that are spending time within the digital ad world, they're already starting to see it. People are tightening ad budgets. They're not spending as much for their full year ad buys. They're starting to think a little bit more about, what does it look like? What does the future look like for the next few months? So I think it's going to be interesting to see what Q2 looks like for everybody.
Do you think short-term marketers pull from Twitter, just given the uncertainty about the platform and the uncertainty about how the platform will be viewed under Elon Musk?
Well, they have 6 or so months before the merger is likely to close and for all this to happen.
Power users are already leaving to some degree. Some of them are.
I think uncertainty is going to hurt them. And it's unclear to everybody whether they're going to continue to operate as they did before, or are they going to get a little bit tentative and it starts changing the environment of it. And then post the transaction, does Elon Musk fundamentally change how they think about advertising?
All right. Sal, great to see you. Thank you.
Thank you for having me.
Sal Bloom, SRB Ventures. Karen, how are you feeling about your Twitter short?
My Twitter short is really, I'm feeling good going into tomorrow's earnings.
Yeah.
I think that won't help. And it's really about the merger agreement, the risk reward. It's all about risk reward. I get, added on Twitter. You hate Elon. I don't hate Elon. I think he's a genius. It's just a question of here's a merger agreement that is actually much better for Elon. He can walk away and just pay $1 billion. If that happens, there's a ton of downside.
Yeah, it just seems to me when we look at the world that Twitter's in, and there's nothing in terms of this monetization that's changed, and this is my frustration because we heard very different things 18 months ago. I would probably tend to agree with Karen. What Sahil is talking about, the overall ad market, like the cyclicality of the digital ad market in the next 3 to 6 months, he's right, under a lot of pressure. That's not really the issue, though, I think these companies are facing. I think they're wrestling with who's really in the driver's seat. Because, look, we've had these periods before, and I think advertisers really have no place else to go. So let's see.